This is the curious case of Moonstone Bank, one of the smallest banks in America that found itself in the middle of the decade's largest fraud. While Alameda Research and FTX didn't collapse until 2022, Moonstone, once known as Farmington State Bank, had existed in the sleepy town of Farmington, Washington since 1929. The bank, which mainly catered to local farmers and ranchers, was purchased in 1995 by a Hong Kong British citizen named Archie Chan. Chan held on to Farmington, making few, if any, changes to the business until, in 2020, he sold the bank to a company called FBH. FBH is directly controlled by Jean Chalopin, who serves as the CEO and executive chairman of Deltec Bank and Trust in the Bahamas, a bank that has serviced many of the largest crypto companies in the world, including FTX and Tether. Farmington, which had long been regulated by the Federal Depositors Insurance Corporation, quickly moved to switch regulatory oversight to the Federal Reserve. While this transition occurred, the bank also altered its business model. Instead of small, low-risk loans to farmers and ranchers, they would take on cannabis and cryptocurrency businesses as new clients. The new business model was met with a new name as well, Moonstone Bank, moon like to the moon, and stone as in high on weed, and a new chief digital officer, Jean Chalopin's son, Janvier Chalopin. After switching business models, the bank began to look for investors who might be interested in the new bank. Luckily for Moonstone, Sam Bankman-Fried had money to give away, and in March of 2022, Alameda Research Ventures invested $11.5 million for 10% control of the bank. This valued Moonstone at $115 million, despite only having $10 million in customer deposits. SBF soon used Moonstone as a way to move money into and out of the US, depositing over $50 million into the rural bank. But the match was not made in heaven. With the downfall of FTX and Alameda in November of 2022, the Alameda investment in Moonstone began to be scrutinized by the media and public alike. Knowing the $11.5 million investment was as good as gone, Moonstone struggled to sustain its new business model, and by August of 2023 had received a cease and desist letter from the Federal Reserve. A purchase of assets by the Eastern Bank of Oregon went through without any issues, and as of this year, there is no longer a Farmington State or Moonstone Bank. Read our coverage of Moonstone on protos.com.